the 4 things you need to know to negotiate the best terms on credit and financing? Well, that's what I'm gonna dive into right now, and it makes a huge difference in your business. Look, I've gotten loans for $75,000 and paid $9,000 a month, and I've also gotten loans for $325,000 and only paid payments of $4,000 a month. This is how important terms are to your business. By getting long terms and low interest rates, you can take on a lot more money to help your business grow at an even faster pace. Well, how do you do this? Well, there's 4 things you need to know to negotiate the absolute best terms and credit financing, and I'm going to dive into all 4 right now. Number 1 of 4, come prepared. Know what your situation is. Look, you should know what your strengths are and what your weaknesses are. How is your personal credit? Do you have established business credit? How long have you been in business? Is your revenue consistent? If they look at your bank statements, does it show more money coming in than going out? Or does it show that you're overdrawing the account? What are all of your strengths and what are your weaknesses? Write them down. Now, when I go to apply for a loan, I actually supply a letter of explanation. These are like magic for you because the letter of explanation will do 2 things. It will, first of all, let the lender know you acknowledge the weaknesses and explain why the weaknesses are there. And it will also tell them the strengths, or what we call in lending, compensating factors on why you should get approved. Look, hundreds of millions of dollars in loans I've been able to get funded for my clients because of a simple LOX. Now, a lot of borrowers think that they're going to hurt themselves by telling a lender what the weaknesses are. The lender already knows what your weaknesses are. You're not going to hide that from them. But a letter of explanation will say, look, I know this happened. Here's what happened. Here's what I learned. Here's how I've recovered. And by the way, here's the strengths that compensate or overcome that weakness. Let me give you an example. Let's say you have damaged personal credit. That's not uncommon for entrepreneurs. We're risk takers. Our credit oftentimes reflects that. But by going to a lender and saying, look, I had some problems with things in the past. I over leveraged myself to get the business off the ground. I was late on some things years ago. But guess what? I learned my lesson. Since then, I've got my budget in line, and now I pay my bills as agreed the last 3 years. And by the way, I've also established business credit for my business. And as you will see, my business credit has paid its bills flawlessly for the last 2 years. Now, if I put that in a letter of explanation, then what I'm saying is I acknowledge the fact that I have credit issues. Here's what happened. Here's why it happened. I take ownership. I did it. Here's what I learned. And here's the proof that I've recovered from that. And by the way, here's another strength that you should look at kind of to offset this weakness. A letter of explanation does a very good job of helping the lender understand that you understand what your faults are and that you fix those things to alleviate the fear in their mind that you haven't learned your lessons, and it really highlights the strengths of your business. But this can only happen if you're doing number 1. You need to write down, you need to understand what your strengths and weaknesses are and write that letter of explanation. And that brings me to number 2. Number 2, you need to build a relationship with your lender or with your broker. So let's look at lenders. Look, I teach a lot of business owners how to do funding stacking, where they're going out and getting hundreds and hundreds and hundreds of thousands of dollars by getting money at the same time from multiple different lenders. Step number 1 of this process is you need to build a relationship with the bank by going in and opening up checking accounts, savings accounts, even money market accounts, by building a relationship with a business banker, by having even a checking account that has money going through that account. Those are leveraging your relationship with the bank to get financing. And if you do this and this alone, oftentimes it results to 30, 50%, or even more money coming from that exact same lender, just because you have the relationship with them. So if you know you're going to work directly with the bank, a regional bank, a national bank, even a credit union, go and open accounts with them. Get a relationship with a banker. Be moving some money in and out of those accounts, and that goes a long way to helping you get approved. Now, exactly the same thing applies for a broker. Look, we fund hundreds of millions of dollars a year here at Credit Suite, and I'll tell you that we can get deals done that you, as a borrower, cannot walk into the same lender and get done. As a matter of fact, we see this all the time. Borrowers that come to us, they've been to lenders, they got denied. We go to the exact same lender and we get them approved. And they come to us and say, how did you do that? How we did it was we leveraged the relationship we have with this lender by funding tens of millions of dollars of business with them to get this deal done. So you want to have a relationship with a broker that's big enough, and what they're called as super brokers, that have these relationships with lenders, because these brokers can get deals done when normal brokers and even you as a borrower simply can't. So it all comes down to relationship. relationships. Either have the relationship with the lender if you're applying directly, or have the relationship with the broker and make sure they have the relationship with the lenders to be able to help you get more approvals and better terms. And that brings me to number 3. You have to understand your options. Look, I just got off a phone call with a good friend of mine who just sold his restaurant business in Mexico, and he's looking for the next thing he wants to do. And he said, look, I want to buy a business. What are my options? And we just went through and had this exact same discussion. There's 3 types of lending that exist today. Lending is based on cash flow, lending is based on credit, and lending is based on collateral. What is your strength? Do you have assets that you can serve up as collateral? Do you have consistent cash flow that you can verify on bank statements or maybe even tax returns? Do you have good personal credit or good business credit? Knowing what your strength is will help you determine the right kind of financing to go out and apply for. Look, a lot of business owners get denied just because they're applying for the wrong kind of financing. They have cash flow as their strength, and they're trying to go get financing that's based on credit quality when their credit quality is not good. This happens all the time. But when you understand this 3 C's formula, cash flow, credit, or collateral, you can understand what your strength is and go find lenders that lend based on that strength. Now, if you have no strength, it's okay. Then you want to look at grants. You want to look at crowdfunding. You even want to look at business credit. These are ways to finance your business that don't need a strength to actually get you approved. And by the way, if you have all of those strengths, good credit, good cash flow, and good collateral, that's what tees you up perfectly for the best kind of loans, which are term loans and SBA loans. And that brings me to point number 4 to negotiate and get the best terms. Present some kind of collateral. Look, for an SBA loan, it's SBA's underwriting requirements that you pledge enough collateral to compensate for the amount that you're actually borrowing. If I'm getting $100,000 from SBA, they want to see I have $100,000 worth of assets or collateral to pledge. And they'll come after all my business and all my personal assets until I have that. That is how important assets and collateral is to lenders. And assets and collateral give you a lot of leverage. So if you have stocks, bonds, 401ks, IRAs, purchase orders, your customers pay you on terms through account receivables, cryptocurrency, vehicles, real estate, any kind of asset you have that can serve up as collateral, you want to use that as leverage to be able to negotiate better terms. Now, using these 4 things, you can now negotiate the best terms. You know how to find the right lenders. You know how to actually leverage the collateral that you have to be able to get better financing. You have relationships with the lenders, and you're prepared to tell them about your strengths and your weaknesses and how the strengths overcome the weaknesses. And when you've done this, it sets you up perfectly to start negotiating. So when you get those approval terms, if you don't like them, ask them for more of what you want. Ask them for higher approval amounts. Ask for lower interest rates. Whatever it is you're not happy with, make sure you're talking to them about you not being happy and discussing what are the other options. Can they come down on the rate? What's needed to come down on the rate? Can they give you a higher approval amount? I don't like to just ask. I like to come in with verbiage like, hey, what do I need to do to get this? Hey, that interest rate's higher than I want to pay. What do I need to do to get a lower interest rate? That way it tells them I'm taking ownership and accountability. I just want to know what's needed on my end to be able to get the terms that I want. It also helps if you're leveraging other lenders against each other. So go out, get 2 or 3 approvals with 2 or 3 different lenders, then find the one you like the most. And if they're not the best terms, then negotiate using the approvals you have with the other lenders. You would be astonished at how much leverage this gives you when you have other lenders that are interested in lending to you and other lenders what they will do to compensate to be able to get that deal to take it from these other lenders. So if you followed these tips, now you can negotiate the absolute best terms on the credit and financing that you deserve to have. If you want to learn more about getting the best financing, go to creditsuite.com/consult and get a free finance assessment where we talk about how to make your business more fundable, how to get access to more business credit, and how to tap into all the lending that's available for you right now. Did you get value from this training? If so, make sure you like and subscribe and keep your eye out for our next training. We'll talk about more cool ways to get the money you need to start and grow your business.